Folks, welcome to Sunday Night Futures Live. This is where we review the opening price action of the major averages. We're going to talk about economic data coming out this week. It's going to be a big week for economic data. We will talk about the CBDC, the central bank digital dollar, and what needs to get done to try to stop this catastrophe from happening, because they're trying to do it through a executive order, not through an act of Congress. So Congress is already in on trying to get some legislation out. We're going to talk about that in a moment, but we need to get vocal, very vocal, because this is a serious problem. So let's get to the charts. But first, let's say hello to people, which would be appropriate. Tim, welcome, sir. Hope everybody had a great weekend, and I'm ready. Let's share my screen, and let's get to the Larry. During the Paris, please pay respects to the great Jim. That's right. He's buried over there. Right. Okay. Yeah, that's a good idea. I didn't think about that. Thanks, Larry. Pedro, welcome. Franklin. Oh, Jeff. Hello, Jeff and Franklin. Franklin, I just got your note. I'm re-rendering the week ahead commentary. Oh, it's done. So I'm going to get this out as soon as we get done here. So I sent out the week ahead commentary to members, and it was a corrupt file. So hopefully this one works. I'll check it out before I send it out. Welcome. Finish saying hello to people. Sam, welcome. RB, welcome. It worked. Oh, it's worked for you. It didn't work for Franklin. Franklin said that it showed only one chart. Maybe that was the first one that I put up, Franklin. All right, so the second one I put up is good. Okay, good. All right, so I don't need to do that. All right, good news. All right, thank you, guys. Denny, welcome. TF Hatter, welcome, sir. Dane, welcome. All right, Mr. Pete, welcome. All right, let's get to it. I already went over a lot of concerns that I had about this market with members on the week ahead commentary. I sent that out. I'm not going to belabor the comments that much. Long story short, we went into last week bullish, macro longer term bearish. Going into this week, we go into the week bullish, somewhat bullish, not as bullish as last week, but I have some good setups. I did the 30-minute chart club. Link below if you want to join in. It's a private live stream that was posted yesterday. We have our 4 top stocks for quick swing trades. I'll go over them in a minute. Paul, welcome. Okay, let's share my screen for the 5th time. I said I would do that. And let's talk stocks. All right, so what we're looking at here is a 15-minute chart, E-minis, and we're down slightly. We'll probably continue lower. In orange, you'll see that we have the 21-period exponential moving average. Below that, blue is the 20-period moving average, and below that in purple is the 50-period exponential moving averages. Those have been acting as very good support levels for this market for the past several days. Let's see whether or not they become resistance or continue to act as support. So right now we're down slightly in the E-mini world. Continuing on with equities, Trip Qs, NASDAQ 100 down 0.14%. Looks like we're probably going to head lower. And keep in mind where we left the day on Friday, right? It was a strong close, and we were overbought on RSI, 15-minute chart up at 80s. So it makes sense that we're going to pull back, consolidate here. We'll watch it, and we'll see whether our support levels hold. Russell 2000. This one's a little bit more concerning to me in that we have put in a lower high, and now we've broken down to a lower low. That's a problem. We're only talking about a 15-minute chart here, and we're already retesting the 21-period exponential moving average. The NASDAQ 100 down as well. Left the day overbought on RSI. There was really no downtick day on Friday, except for Tesla. Tesla, which we have a short position in, using options, a strangle. The shares were strong all day long. Let's bring it up so you see what I'm talking about. It was strong all day long until around the clock, where they stalled out and then began to roll over into the close. But still net a very strong day, and they limped up in the after hours session. So we're going to be keeping an eye on Tesla. Our strangle trade, we're profitable on it. Those options expire on the 31st, so we may look to book profits on that trade. The Dow Jones, again, another index that was at around 76, 78 on RSI on a 15-minute chart, selling off here slightly, spot 1.3, spot 4 now to the downside. We're pretty extended on these stochastics. We've been long in the tooth here, and this is a perfect example of why I complain about, these overly simplified rules of thumb, that when you see stochastics above 80, right here, where it first went over 80, was down at the highs. If you would have shorted this, the high was 33,023. It was quite a while ago, and if you would have shorted the Dow Jones, you would have had your face ripped off, because what was overbought here, remained overbought and ripped your face off. So don't use that rule of thumb. But it does look like now we're beginning to roll over. Again, on these intraday charts, I like to use the 21 period and the 50 period exponential moving averages. I don't talk about them much, but I've decided let's talk more about them. Okay, so that's the Dow Jones. Those are equities. Now, we wanted to talk about the U.S. dollar. The U.S. dollar came under some pressure the back half of the week, and we are about flat with the close on Friday relative to where we closed out on the after-hours session. We're higher, but I like to go by where we closed on Friday, and we're actually a little bit higher than where we were at Friday's close. The RSI looks strong here. Stokes looks strong. But this is only a 15-minute chart. Let's get a better feel. Let's pull back to a 4-hour chart. We're holding the period EMA. I think what we need to do here is clear this all up. And here is our lower band of support. It looks as though we're putting in a higher low. And for those that are new, you're wondering, why does the dollar matter so much? Well, if you're trading gold mining stocks, gold, emerging markets, it matters a lot because they have an inverse correlation to the U.S. dollar. And even your triple Q names, if the dollar gets too hot, the triple Q names, which are multinational names, they don't like a strong U.S. dollar. They like a weaker U.S. dollar because they're more competitive overseas. A strong U.S. dollar makes their goods more expensive. So we're looking good here. We're holding support levels. And there's kind of like the midpoint of the trading range in orange. Let's go back to the 15-minute chart. All right. Let's take a look now at commodities. We want to take a look at the dollar first, and we go into commodities because we have a good feel for where we want to be positioned relative to the dollar. And crude oil here had an amazing move on Friday, a little bit too amazing of a move if you are worried about inflation, as I believe everybody is. And I think that oil is going up a lot higher based upon the weekly chart. The 15-minute chart doesn't look that good, but remember, we left the day very overbought on Friday. I think that we're going to pull back, we're going to consolidate, and we are going to resume the weekly uptrend on oil. Take a peek at the weekly chart. This is last week, and this is this week. No new weekly higher high yet, but I think we are going to get one. And look out above if and when we do get this breakout on oil, because everybody's going to be talking about what's the deal with oil and what are we going to do with our portfolio. So be careful. Oil, natural gas, out plummeting, down almost 8%. You know, it had a nice run off the lows. It was due for a pullback. I'm not sure what's driving this. Is it technical? Is there news that came out? I'm not quite sure. But we'll definitely be watching Natty Gas tomorrow. And right now we don't have a position in it, thank goodness. So, wow, what a move here. So let's continue on. Gold. Pulling back, stronger U.S. dollar. Actually, why does it say we're up? Why does it say we're up? The price is right, but the percentage gain is inaccurate. We're down. We're down relative to the close on Friday. Actually, no. Relative to the close in the after hours session. Weird. Okay. All right. The price is right. I'm not 100% sure how they're calculating the percentage change. It looks like we are down relative to Friday's ultimate close. Silver taking a hit here. Okay. Let's go to the weekly charts to talk about ag prices, cattle prices. And this is just basically our benchmark for inflation. What's inflation doing out there? It gives us a little inside baseball. I have to listen to the talking heads on CNBC and absorb their nonsense narrative. Corn. We went into last week very weak. We have what appears to be a continuation breakdown. We're holding support on a weekly time frame, but this is not a pretty chart. And that's a good thing. We want food prices to come in. Soybeans. I put in a new weekly lower low. However, it rallied off of support. The 50-period EMA held weekly time frame. Wheat prices very weak. We had broken support here the week of 13th, continuation move lower on the 20th, and then again on the 27th. So wheat price is weak. Cattle. I mean, I was in the store the other day. I was going to buy a steak. It was either going to be chicken or steak. I like to cook. So I was by myself. I said, I looked at the price of, it was like 2 pounds of chicken, and it was like $10.50. And I looked at the steak, a ribeye steak. It was like $19 for this teeny weeny steak. I said, forget it. I'll get 2 pounds of chicken. So, from what I understand, this is a really weird, let's bring it up, a really weird statistic. We have the lowest cattle herds right now since relative to the lowest cattle count since 1962, well before I was born. And it looks as though it's only going lower. So expect higher highs here. This is a very powerful chart. This is the contract cattle futures. Very powerful chart. Check out a daily view. Yeah, man, this is going up higher. Very, very powerful. Let's do a quick check of yields. All right, so yields, we're going to go to another chart of this in a moment, but yields were very high last week. They did manage to close back down below a 4 handle, but it was a battle at that 4 handle. I thought that was going to be a floor so strong, but ultimately the 10-year yield dropped down below 4%, 3.97. And let's check in with the VIX volatility index. You can see how much I use this. It's very, very important. This wants to go up. You can see that every time it hits the 21 period EMA in orange, it gets rejected. But we have since broken out, or today we've now broken out on a 15-minute chart. We're doing a retest now. Let's see if we get follow through to the upside. So in closing, you know, we went into last week pretty bullish on the equity market. I remain bullish, but not as much. We're going to talk a little bit about, I already went over the yield curve with members. We're watching a very important chart on the yield curve with members. An event is happening there, and we will be trading off of it. The weekly chart of the 10-year yield is not looking good. And, excuse me, 10-year, the yield curve, not the 10-year yield. Let's get to it. Stick around to the end, and we'll go over this chart and why it's so critical and what's going on with the yield curve. But let's begin first with our friend over at JP Morgan.
Investment has been
Jamie
curtailed.
Dimon himself.
I have all respect for Jay Powell, But the fact is we lost a little bit of control of inflation. Models didn't pick that up. I've always been suspicious of models, and we use them extensively. I always say you use a little bit of judgment too. And there's been a sea change. Governments are borrowing a lot of money, and you got to incorporate that in what's taking place. That means they're spending it. That's inflationary. Wages we've seen come down, but not so much. Right. Oil and gas will probably be going up because the investment has been curtailed. I have all respect for Jay Powell.
Okay, so basically what
the fact is
he's doing here is playing the game. All due respect to Jay Powell, he's got the Ukrainian flag on his lapel.
Inflation models didn't.
It's the United States flag, which is a crime to me. But anyway, oil and gas, he acknowledges, are going up. That's going to be a major, major problem. Also, a major problem is the spending that he referenced. The government wants to blame you and me, the consumer, for inflation. It's not our fault. It's not our fault. They're spending money hand over fist. The Federal Reserve prints it, they spend it. Reckless abandon. So it's government spending. Until that gets reined in, inflation is not going anywhere, unless, of course, the Fed funds rate goes measurably higher above the rate of inflation, and that would crush the economy. So taking a look at the 10-year yield, while we did close out the week back down below a 4 handle, we still held a major breakout on the 10-year yield. Now, this is going to be a problem longer term for those companies that are looking to refinance their debt, especially the debt they took out at 0%. I keep saying this, but it's important. Your big money center banks, your triple Q, those companies that have cut heads, they're going to be able to absorb higher interest rates more so than they were able to do back here. So they can continue up higher here. File anyway, but even if we get to 4.5% on the 10-year, I don't think these stocks are going to be able to hold up. I think they're going to pull back. Taking a look at our top stocks for the new trading week, we went over these stocks on the 30-minute chart club. There's a link below if you want to join in. And we went over Walmart. Beautiful TTM squeeze. That's when your Bollinger Bands trade inside your Keltner channels on a 30-minute chart. Coinbase setting up nicely. Airbnb. We booked profits on that trade. We're looking for a pullback. We're going to re-enter. Netflix, we shorted twice. It has since pulled back to support. We're looking to open up a long trade here on Netflix. Go to the 30-minute chart club video. I posted it yesterday. It's actually a live stream. And go check out our commentary. Going into the new trading week, we have the S&P 500. This is a week 30-minute chart. Take note of the fact that we broke out above resistance. These are the automated trend lines on TrendSpider. I have alerts set up here. That's why it's not disappearing. But we broke out and we have held it. The question is, do we break it or do we continue to break out higher? So I have an alert set up here. If we do get a rally, I want to know when we hit this upper band of resistance. I also want to know, we have an alert set over here. SPY 30-minute touch up here. SPY 30-minute retest or break of support. Now, taking a look at seasonality, and I want to go back to that 30-minute chart in a moment. The month of March is up on average 62% going back over the past 13 years. When we take a look at the weekly view of how this week normally plays out, this coming week is normally up 67% again over the past 13 years. But the problem comes in, not this week, but the next couple of weeks, because for the past 13 years, the week after next is only up 42%, and it drops down dramatically. The following week, only 33% up. So take heed of seasonality. That should be a major concern. So fair warning. TZ Burton. Hi, Bob. Good show. Yes. Thank you very much, TZ. Thanks for joining in. Yoga Mac. Is anyone else hearing a popping sound, a crackling, or is it just me? Let me know. I don't know if that, I can't hear me, so I would be interested in knowing that myself. Yoga Mac. Sorry I'm late. I went to a walk. Good for you. Wise. Very, very wise. Joe. Ring still in play. I haven't looked at that chart in a while. Let me add that onto the list. We'll take a look at it. Oh, I lost my pen. Use a marker. Okay. So we have ring. Oh, so this crackling. Maybe I'm too close to the mic. Sorry about this. Is it really bad? Let me check out my audio. It looked like it's set up right. Let me try this. I just changed the setting. Can you let me know if that's any better? Welcome, Bonnie Bean. Okay. What I wanted to talk about here before we moved on was the slow stochastics. They're very extended, folks. It doesn't mean they're going to go rolling over and go back down below 20, but they're certainly going to roll over in the next couple of days. So just beware. We're going to get some weakness here. Sounds good, RB? Good. Maybe that helped. Seems like a streaming thing. We'll do it. Thanks, Joe. Appreciate it. Okay, so that's the S&P 500. Let's take a quick peek at the trip Qs. Trip Qs closed out the week looking really good. We broke out above resistance. We're consolidating. We had a resumption of the move higher, but still, we have stochastics that are somewhat extended here and due for a pullback. I just want to get notified if we break the support level. We may throw on a short trade. Quick one, nothing long. Okay, that's the Qs. Let's move on. Economic data. Economic data from last week was real wonky. It was not good. Not horrible, but was not great. Durable goods, big miss here. They were already expecting a negative number. It got worse. So for those not familiar with what durable goods are, that's a measure of the production and sale of items like washing machines, dryers, anything that's a big ticket item that lasts for a number of years. So you're seeing home sales slow, durable goods slowing down. This is the ripple effect that you get from new home sales slowing down. Consumer confidence, that fell. ISM manufacturing index, that came in with a slight beat, but still it's in contraction. Any read below 50 is a sign of contraction. Any read above 50 is a sign of expansion. Initial jobless claims, this is about what was expected. I'm really surprised to see that yields broke down on Friday, given that the U.S. services final PMI for February came in with a slight uptick. ISM Services, that's the Institute for Supply Management Services, that beat expectations, yet yields dropped. And I think that was more to do with technical, because we were talking about the 10-year yield on a daily time frame, and that this is not what I wanted. We were very extended on our momentum indicators, and we're beginning to roll over here a bit on the 10-year yield daily time frame. A better way to look at it would be the TNX. And again, we're rolling over here a bit. Doesn't mean we're going to drop like a rock. I don't think that we are. I think yields are going up. Now, going into the new trading week, there are going to be a lot of reports that come out. Factory orders on Monday. Fed Chair Powell is going to be in front of the Senate. Credit. ADP, this is jobs week, folks. Buckle up. ADP employment report. That's the precursor to non-farm payrolls, which comes out on Friday. I call that the Pimp Mac Daddy of all economic data. So it's going to be a very, very big week, and Jay Powell is going to be in the Congress for 2 days, and the markets are going to be hanging on every single word. So buckle up. Schiller PE ratio, we're very, very expensive. 29.38 on the Schiller PE ratio relative to the mean of 17. The market valuation, as measured by the Buffett indicator, it states fairly valued, however, still very far extended away from historical trend, roughly 28% extended beyond. We're right on the border of being overvalued and fairly valued using the Buffett indicator. Now, as far as earnings go this week, I think that earnings are pretty much done. I don't see any names on here with the exception of one that we may consider trading, and that would be DocuSign, and I would stay very small there. Other than that, I don't see any earnings trades that are interesting or any earnings trades that could move the market. So, CrowdStrike. I just saw this one. I've traded CrowdStrike. That's a good stock. We may trade CrowdStrike. So 2 names we may trade. I haven't done a lot of earnings trades this quarter. Now, we were able to use this chart, the VIX average daily call option volume, to basically call a rally in the equity market. There was a lot of buying of call options, and this could be construed as a contrarian indicator as well, that this may not be a very long-lasting rally in the market. So please be very, very careful. I'm going to go to the chart in a moment. The yield curve chart, stick around. I titled this live stream basically Executive Order 14067, ensuring the responsible development of digital assets. That's what they're calling this bank digital dollar. I can't see how this gets done without an act of Congress, and I'm kind of glad that it's being done by executive order, so that way the next president that comes in can strike it down, and that the Congress has not voted on this, and that it's really just hanging by the next president that comes in could strike it down automatically, and you don't have to worry about getting pushed through Congress through legislation. And there's already legislation being set up by Congressman Tom Emmer. Now, he's the House Majority Whip. He's a pretty powerful guy. He's second in control of the House versus the chairman. And I would strongly suggest everybody reach out to their congressman, see where they stand on this legislation. Today, I introduced the CBDC Anti-Surveillance State Act to halt efforts of the unelected bureaucrats in Washington, D.C. from stripping Americans of their rights to financial privacy. Folks, we already have a digital currency. It's not as if the Federal Reserve goes in when they print out $1.7 trillion. They're not printing out bills. It's digital. It's all it is a digital ledger. That's it. Simple as that. The problem with this central bank digital dollar is that you're probably not going to be doing business with your local bank anymore. You're going to have an account with the Federal Reserve. Who wants that? Secondly, the currency or the digital dollars are programmable, meaning suppose we have a correction, a very violent correction in the stock market, a very violent recession, and people begin to hoard their money and won't spend it. Normally, what would happen is that Congress spends more money, printed by the Federal Reserve. The Federal Reserve cuts rates, but with this programmable currency, all they need to do is say, listen, either you spend 10% of the money you have in your bank or you lose it. It evaporates into the ether. They have that power. They have that power with these Green New Deal initiatives to say that, okay, you've already spent X amount of dollars on gasoline this week or energy this week. You're cut off. They can do that. All it takes is the appropriate QR code or the SKU code for whatever you're purchasing. It gets counted as a carbon taxable item on your individual footprint, and they say, okay, you know what, you've gone too far. We're going to stop you, and good luck getting more gasoline. So this is a nightmare. This is a horrible idea. The so-called elites, which I like to call them parasites, over in Davos, they have this idea that they have the best way of managing the world. And the problem is with what they want to do and what our powerful politicians here want to do is they're stifling innovation. They're stifling ideas. And if you stifle innovation, you're back to the dark ages when nobody wanted to talk out. Then you have the Renaissance. So this is going down a very, very bad path where they could punish you for your ideas. So please reach out to your congressman. Where do you stand on this piece of legislation? I will copy and paste this. I would encourage you to email Congressman Emmer and see whether or not your congressman is signed on to this initiative, or do they need a conversation or a phone call to them by you, making sure that they know that we're watching them. We're watching them, but they need to let you know that we're watching as well. So please reach out to them. Let's do one last chart here. And I went over this yesterday with members. Not this weekend, the prior weekend, I was talking about how the yield curve was holding in orange here, the lower band of the Keltner channel. We have now broke down and through it. The problem is with that, this is not the first time that it's happened. And when we ultimately reach our price target, where we have a price target on the yield curve, we will be shorting the market pretty aggressively. We're not ready yet, but we will be watching this every single day, looking to get ready to short this market, because you could see that every time in the past where we have had a dramatic sell-off down below the Keltner channels, like back here, the S&P 500, which is overlaid in blue, corrected. What else did it do? It back here. What did the S&P 500 do? Corrected. So even back here in November, S&P 500 corrected. So please be very, very vigilant. Watch this chart. We watch it constantly. And we will be looking to put a short trade on the market. Not quite ready yet. I think this is probably going to go lower. And when it finally hits our support level, I'll be sending out alerts to members, and we will be shorting this market. Will it be the ultimate short, meaning where the yield curve ultimately goes parabolic and begins to steepen? My answer to that question is I don't know. I don't know yet. Right now on a monthly chart, the yield curve is rolling back over. This is very, very bearish. Whenever you see your stochastic, which are a momentum indicator, rolling over down below 20, it's generally a bloodbath sell-off on whatever you're trading. The takeaway from that observation is also a double-edged sword. While it's a violent sell-off, the reaction, the recovery is equally as violent to the upside. So this monthly rollover on the yield curve, assuming that we close like this, we may recover. It's only the beginning of March. Perhaps we'll break out. I don't know. But we're going to be watching it very, very closely. We're very close to a new monthly low. Still an inside month. But folks, buckle up for this ride, because when this begins to steepen and go the wrong way to the upside, things are going to get real fast in the equity markets. So be cognizant, respect this chart, and we will be watching it with great interest. Joel, nat gas. Wow. Nat gas is so crazily violent. Oh, that's the NASDAQ. Wrong. Here we go. Wow. What a bloodbath. Let's check back in with the NASDAQ really quick. I just saw something that was optimistic. Yeah, we're holding the 21 period EMA. For now, anyway. Looks good. All right. It will, oh, no doubt about it. It will also be used to limit travel. Know that they do not want people traveling. Your digital currency will be non-functional when you are beyond a certain radius from your home. Yeah, you have cities now in Great Britain. I think one of them is Cambridge. I want to say Cambridge. Fact check me on it, but they're already instituting a zone around your home where you can't go beyond it. And if you go beyond it, they'll tax you. And the easy way to do it as a central bank digital currency, they'll just take it out of your bank account. So what we're headed into some very scary times. And Great Britain, Canada, Australia, New Zealand, they're way ahead of us. They're the test grounds. Yep, agree, Tim. All right, so we have some requests here. Yoga Mac. We'll do some chart requests. AI, isn't Microsoft in that stock? Don't they own a segment of the company? I thought I heard that. Tim, AGNC. Has it found support? We'll take a look. PSX, CF. All right. RB, Bob, we have Powell on Tuesday. It should be interesting. No doubt about it. Siri. The last time I looked at Siri, that was getting beaten up like an unwanted stepchild. Franklin 6. Is that a symbol? Let me know, pal. Yeah, 15-minute cities. Yep. MSFT. I gotta check the members area. Eric, Zoom. Oh yeah, Franklin. Yeah, I have yours. 6. Okay, Boyle and Zoom. We have a lot to go over here. 6. Okay. All right, let's do this. Franklin usually checks out at 7 o'clock. We're going to go over Franklin's first. So that way he's taken care of. So let's get to it. Folks, we're going to be using our friends over at TrendSpider Automated Technical Analysis. 35% discount code below. Please help support the channel and start using AI for your charting. And believe me, a lot of people are using it now. I see a lot of subscriptions come through. Okay, 6. That's wrong, Bob. Okay. Oh, 6 Flags. Why don't I remember that? Interesting. This is a monthly chart. I haven't looked at this one in a while. All right. So obviously we're in a downtrend channel, and that has not changed yet. Momentum is beginning to build to the upside. We do have a higher low. And we did break out above resistance already this month. So we have a new monthly higher high, which is pretty good. Weekly view. There's the breakout. I would really like to see, if you're a believer like I am, that we're going to get a quick pullback in this market. I'd like to see a retest of the breakout point on 6 Flags. So it's a good looking chart. Yeah, be careful here, Franklin. So here's the power of the automated trend lines. All right, I haven't looked at this chart in months. Looking at this right away, looks like a good chart. But if you click the automated trend lines, automatically it's telling you you're at resistance. You do not want to buy this. Expect a pullback on the shares. Now, I think that we could easily come back down and retest that weekly support level at around 29.35, Franklin. So that would be my price target. We closed out the day on Friday at $30.40. It's not a big retracement. So that's the call here. Just keep in mind, you have a lot of resistance here. Doesn't mean it can't break through it. You know, resistance levels were made to be broken. But I think that this stock would do a far better by first pulling back and then getting a running start at that resistance level, because this will now probably act as a rising upper band of resistance. So that's my take on 6. Ring. Now, I was bullish on this one a few weeks ago. We made a few bucks on it. I really, I like this setup. This is a Bollinger Band squeeze or TTM squeeze, whatever you want to call it. When you have your Bollingers inside the Keltner channels, this thing's going to rip, and that's on a weekly time frame. You know, the weekly momentum indicator, the Stokes, they're weak, but I like the setup. Daily chart. There's more upside here. Just keep in mind you're going to have resistance up at around $40 a share on Ring. Stokes are going in the right direction. I think that if you're looking for a pullback, $35, 36 cents, give or take a dime, is a good support level to buy at. So Ring is looking good. AI. Wow. Huge move. Do they make any money? Momentum is beginning to break out. The weekly chart looks awesome. Really, really awesome. The stock's going up. Nice long base. Very, very nice. Stokes high or low. I think it's a buy. AGNC. Do we have support? AGNC. You have support on a weekly time frame down at $9 and say $10 at $10. Losing a little bit of momentum here. That's okay. Not a lot of damage done. Looks like an orderly pullback. I wouldn't buy here. I'd wait for the breakout or that $10 retest. Daily view. Stokes look good. Momentum building. Looks like we may break out. You know what? I would be okay with buying here. Tight stop right below support at around 1051. And if that breaks, watch that 10 handle, see if it holds. That's right around here. It's actually $9.93. But this would be the secondary support level I'd be looking to buy at if we get a retracement. Last week, I lost a lot less than Q than expected. Okay. You're welcome, Tim. You are welcome, Franklin. PAS, Sean. Okay. That'll be the last one for the night. PAAS. PSX. Phillips. You got to love these names. I think the energy is going up higher. Oil, strong. You're in a bull flag setup here. Again, the automated trend lines. And it looks as though we're setting this is a buy. This is a buy. Keep in mind we have resistance immediately above at 107.25, a breakout and a close above that mark. I'd be long the stock. Stokes rising, building momentum, very bullish. PSX looks like it's going up. Resistance on PSX up at 114 per share. CF Industries. Let's go to the weekly chart. Consolidating. Not much happening here. A lot of backing and filling. It's not a bad thing. It's a very tight consolidation. I think the selling is over, and now it's just a matter of backing and filling. And this is another instance where you have a Bollinger Band squeeze setting up. The Bollinger Bands in red are inside the Keltner channels. Very tight setup. Does that mean it's a buy right here, right now? No, but you want to set up your trigger. And I think that trigger can be identified by doing this. I think that, yeah, they tried to break it out. It was rejected. I think if we get a clean breakout above, let's call it $86.50 to $87 per share, you need to be a buyer of CF. It's probably going to go up. It's going to probably have a nice little short covering rally, similar to back here. The last time we had this tightness in the Bollingers, this is all very, very pretty tight. So this is like a coiled spring. That's the analogy that I use. Let's go to a 30-minute chart really quick. And rolled over. Broke support. So give it some room. Wait for the daily breakout. It's rolling over here a little bit. You'll get your opportunity. I like the longer term consolidation. In all probability, it's going to get resolved to the upside. Just doesn't appear it's we're back up. Okay, that was weird. That was weird. All right, we have Siri. This stock has been beaten up quite a bit. Wow, look at this thing. Still getting beaten up. I haven't looked at this in weeks. The last time I looked at it, we had RSI on a daily time frame below 20. Where is it now? Where's my RSI? Daily RSI. This is what I mean. You can't go buying stocks simply because you have an RSI down bunny. You got to watch price action. You have to watch volume action. You got to watch your Stokes. It's a combination of things. And you need to know where is historical support. So right now, the daily chart is worthless to me, with the exception of the fact that it is trading sideways. RSI, it's interesting, but single stocks below $5 can ease single digits on RSI. So RSI at 19.66 does not impress me at all. The low of this RSI was a 15 handle. I've seen worse. Now, let's get rid of RSI. Okay, so new weekly lower lows. We need to identify where we have historical support. This is the key to playing the extreme oversold game. I think very easily we're going to go down to a four handle, low four handle. I should say it's already got a four handle, $4 per share. I think we can break that. And I think we're coming down here. 3.29. on Siri. That's where I would be looking at it. RSI right now does not impress me in the least. Weak stocks tend to get weaker. Do not get lured in by the RSI. What matters most, RSI is only your clue that things are unsustainable. That's it. What you need to identify is are areas of potential support, because this is under institutional distribution. So your buying is not going to do anything to help support the stock. However, aggregate buying of retail and institutional buyers will help defend the shares. So where are those support levels where people of like mind will be willing to step in and try to bid the shares? $4.07. If that fails, which I think it does, $3.29. That's where I look to be a buyer. $3.29 on Siri, and always leg into these trades. Your first trade, your first leg into the trade, assume that it's going to lose money. Nibble, nibble, nibble. This is the only time that I suggest averaging down, because you're in a trade that is in an unsustainable downtrend. Now, assuming that there are no ongoing concern issues with Siri, which I don't know, I would investigate that. But assuming that that's not a problem, I would leg in at 329 per share. That would be the shot here on Siri. Microsoft. Now, Microsoft, this is an interesting chart. I wouldn't have normally gone over the monthly chart, but Microsoft is closing in on resistance right at around 257 per share. That's only a couple of bucks away from where we're trading at current. Now, this could be construed as a bullish chart in that we've been rising, or a bearish chart. This could be a bear flag setup. So watch for defense of this lower band of support. Now, if we break out above 257, you have a couple of support levels above there at around 260. You get a close above 260 per share. This is going up, but right now it's right at that crossroads. So I'd be careful with Microsoft. Let's go to a weekly chart. Again, lots of resistance immediately above here. Daily chart. I wouldn't be a buyer here. Way too close to resistance. The buy should have been back here on this reversal bar off of support. So I wouldn't be a buyer here. I'd wait for a retracement. I'd be curious to see, do we break through these resistance levels? And this is going to be like a wall of steel trying to get through these three resistance levels. So it's going to be very interesting. So to me, this is a watch. I'm not saying it's not going up. I think it will go up. But does it break through those resistance levels? I don't know. I don't know. Sit, watch, and wait. Boyle, we know that natty gas is getting killed in the futures market at current. So this is not indicative of where we'll be trading tomorrow morning. Now, if you're looking to buy Boyle, I'm not sure how this price action carries through to the morning on nat gas, which at last look was down about 9%. Does that take this down below this support level in red? I don't know, but I'd be looking to see whether or not it holds, because that could be a buy point for Boyle. And we'll look to see whether or not I'm going to overlay weekly support and resistance on a daily chart. Nothing. Monthly. Nothing. So this support level really needs to hold at about $7.10 per share. If it closes back down below that support level, the path of least resistance resumes to the downside. Zoom. We just traded Zoom a couple of weeks ago, made a few shekels. Last week was not a good week. It broke down. I believe they reported earnings last week. Not looking good on a weekly time frame. Now, if it gaps up and recaptures $72 a share, that makes it interesting. Daily view. We were able to recapture support. This could be interesting here. I believe that we're going to get a pullback in the equity market ever so slightly, unless, of course, yields go. This is not working properly. Unless yields go parabolic. I don't know if it breaks through, bounces, touches, and that'll let us know whether or not we want to be involved with Zoom. And that is done. Last chart up for the night is going to be PAAS, Pan American Silver. Great move last week. Silver across the board, powerful week. I'm liking this. You can see here on this weekly chart, I also have overlaid in dash line monthly support levels, and there are a lot of them. We tapped monthly support back in November. That would have been a buy signal on that reversal bar. Looks as though we are going higher. We broke out last week above resistance. PAS going up. Just watch the U.S. dollar. Trades inversely of the U.S. dollar, but I think net, this is a bullish chart. In all probability, it's going to go up higher. But again, watch the U.S. dollar. Strong U.S. dollar, headwind for PAAS. Thank you all. Thank you all for being here. Have a profitable trading week. Just beware of the oversold condition intraday on the S&P 500 triple Qs. We're probably going to get a pullback here. Not a big deal. It becomes a big deal if yields surge up higher and the yield curve begins to steepen. Until then, the path of least resistance at current remains higher for the equity markets until, of course, yields move up. Folks, have a great night. Thank you for being here. Like, subscribe. Don't forget, TrendSpider, 35% discount code below. 30-minute chart club. Use the link below. Join us. Usually every Tuesday and Saturday. Be well.